Hello friends, welcome back to my channel. Please like, subscribe and also press the bell icon. So my next stock pick is Utkarsh Small Finance Bank. So why I say this is good bet could be because it is actually almost like a all-time low. So this was actually gone till 55 and it has come down from 55 levels to almost like 13.2 level now. So if you can see the market cap, so this is 2349 crores. So I mean, if you see in India, getting a banking license is itself is tough. So but this bank actually is trading at almost all-time low. So this is actually a kind of a, you know, this riskless pick, I would say, because if you see the history, even I had recommended South Indian Bank. It was also at 7 rupees or something. Now it is trading at 40. Even if you see this Ujjivan Finance Bank, I think that was also at almost like 13 rupees some time back. Now it's trading at 63. So actually now I am going to explain you what are the positives and what are the risks in this company. So please take your own decisions after consulting your financial advisor. So let's quickly start. So the price of this is actually at 13.2. This is the banking stock. Of course, they are also giving the loans and other things. And face value is 10. So promoter holding is 42.7. I think this also will be, of course, will be gone. Maybe next month 28. Sorry, this month 28 there is a meeting to reverse merge the promoter to this small finance bank. I think if you quickly go to the shareholding pattern, so there are promoters who are holding, sorry, this revenue. So here shareholding, if you see here, promoter actually holding, so this Utkarsh Core Invest Limited is the 42.67% they are holding. Of course, if you go to the shareholding of this company, there are a lot of banks and others are holding it. So this holding company is gone because there is also RBI rule that no promoter can have a more than 25% of shareholding in bank stocks because it's risky. They can influence like that. So RBI is very strict on that. That's why I think this 42.67 will go to this will go to the individual. That means the Utkarsh Small Finance Bank will not have any promoters similar to other bigger banks. If you see HDFC, ICICI Bank, Axis Bank, all these banks don't have any promoter. Actually, it is kind of a run by professionals, and that holding will be by different companies like different banks, mutual funds, FIIs, DIIs, public, and all will be holding that. So this also will become like that. So let's quickly start. So what are the positives? I think this is the diversified distribution network. As you can see here, so total they've got 1105 banking outlets. So and they are actually also kind of, you can see here, banking outlets are the branches, it's called 1105. Good thing is this is well diversified actually. I think here of course there are more than 50 branches are there or outlets are there for these states. I think 1 2 3 4 6 states. Other than that, I think they exist all over India, so it's actually kind of diversified. If you see, I think only in Jammu Kashmir and other some parts they've got one, otherwise they've got kind of a good presence all across. So the next one is actually the loan portfolio. So what I wanted to say earlier and now is, this is very very important. I think why I also recommending this is, so this is uh, the loan book when in March 2020. I mean the reason why it has come down from 55. This is also the reason. So this giant liability group, they were old. I mean, they had given the loan to 88% of the loan book was this JLG. The farmers, and there are some group of people who will be actually doing the business. So I also quickly explained here what is this means. So you can see here giant liability group. So the members will be 4 to 10. They will be mainly doing the farming and microfinance, micro business loans. They will be given. So there is no collateral. I think that is the problem. And bank linkage directly with the bank. I think the people will be directly contact the bank and they will be doing the business. So this one you would also heard. I mean, if you are investing in Indian share market and if you analyze the banking sector, I think Bandhan Bank, so this IDFC First Bank, and Equita Small Finance Bank, and all these had actually the pain of MFI also, micro finance industry pain was there. This is also because of multiple players, multiple these banks and NBFCs had given the loan to the same group of people. I think that's why they have taken the loan from multiple banks and they were not able to pay. I think because of that, this pain is there all across banks. So I think slowly it is I mean, all the banks also learned the lesson. Also RBI has changed some rule. Because of that, I think they are identifying how many loans can be given for one group or something like that. One customer can get how many loans like that. I think that has been kind of maybe a little bit tightened. Because of that, I think the scenario is improving. Apart from that, there is also kind of CGFMU. There is also insurance they are actually making to protect themselves in case the JLG group is not paying. They can get the money from this insurance company. So this is the change actually. As you can see, they are moving from this JLG group loans to diversified secured loans. I think this is where you have to see, secured loans increase to 50% of the loan book. I think this is also good thing is this total loan book is also almost like only 18,000 only. If you can see here, I think this is very very small bank. If you see the Indian the population where they've got this loan penetration and other things, it's still very less actually compared to US and all. So that's why there is a huge potential here. So then because of this 18,000 only they're paying, and because of the secured loan they're moving from this JLG to secured loans. So the risk is very very less. I think this is another positive news. So in terms of key highlights, this is also, as I said, the portfolio is 18,300. And so the degrowth, I think if you can see here, JLG loan book, they are actually degrown. This is very good actually. They are keep on reducing it. So the overall loan itself is 6,400. I think this is as on December 31st. So and non-JLG portfolio is keep on increasing. If you see here, they have grown by 27%. So this is important thing actually. The overall, if you see also, the loan book is more 50% is secured, and even in terms of CASA ratio is also kind of little bit improved, 21%, and CASA plus term deposit also is 81%. Actually, they also in one of the commentary they mentioned that they have actually given back the big deposits from the corporates, and they have actually uh, substituted that with the this retail deposits. Retail deposits are sticky, like customers like me and you. So if you do the fixed deposit, so we don't know how to rotate the money and make money. That's why if you keep a FD, it will stay there for 4 years, 5 years. I think that is what they're saying. So this JLG exposure also is reduced. You can see here from 33% they've reduced it. Secured is now almost like 50%, and non-JLG is also growing good. I think 28%. So MSMEs, they are also growing, and housing loan also they're growing. So apart from this already covered. 50% is secured, and it is diversified as well. And capital also, it's there very well, very well. They've got a lot of capital. I mean, usually 13% and above is the needed one, but here they've got 21%, well equipped also, I can say. I mean, I was trying to search for that word, sorry for that. So here the CD ratio, the deposit versus the what the loan they're giving, that is also actually less. It is improving actually, you can see here. And asset quality is, this is where actually it is struggling, because of this lot of MFI pain. So you can see 11% is the NPA. I think this is where the market has actually punished this bank. So this was 6.2%, now it has gone to 11%. Still there is some pain, which will be also continuing this quarter as well, coming quarter. I think when they're going to declare result in April, so that time also there will be some still pain will be there. I think they may declare little bit profit, or they can also book a loss as well in this quarter. But however, I think what they are saying from financial year 27, that means from the June quarter onwards, whatever they're going to declare, they're going to turn profitable. And also what they committed is their loan book is going to go 30%, the two secured loan book, and also MFI also they've insured it. I think because of this, I'm very much confident that this is really kind of a, you're not going to lose money here. Even if it comes down, face value itself is 10, it can come down to 10. I think that the risk is very less, but I can see, I think this can go up. So risk or negatives, what I can say, I think as I said, this NPA is still there. GNPA you can see here, I think this is also a little bit increased. And this is also, they are actually keep on provisioning. Because of that, actually, you can see here the provisioning, they keep on doing it. Even it is also 4.5% only. If you compare, let's say, other big banks, their provision ratio GNPA will be, I think, 1.5 or something, and NPA is less than 0.5 actually. So compared to that, this is very, very high number. I think that's also one of the reason why you are getting this for 13. If you are entered at the 50, for example 50 or 35 or something, that is a risk. So if you are entering almost like all-time low and at this price, it's actually kind of a not a risky bet in my opinion. So only thing is you need, I think, patience for 1 or 2 quarters, then this will come back. So this is also commentary from management. They clearly mentioned that we believe stress has peaked out. This MFI pain is gone, and profitability trajectory to improve. You can see here financial year 27, and it's going to normalize by financial year 28. So capital adequacy ratio already mentioned. So they had raised the money in last year. That's why they don't need to raise again. Means the dilution will not happen again. But I think this is what they said. I think November they raised 950. So they're also saying that there is no need to raise capital for next 12 months. I think this is a good thing. They're not going to dilute too many shares. And even if you see the number of shares here, let's quickly go back here to number of shares. So 178 crores is share. I think it is not less, but however, I think this is they already diluted. But I think another 1 year they're saying they don't want to dilute it. So that is good thing actually. So if it is above book value, I think the book value will also increase. So you can see here, this is the pain what I'm talking about. The revenue is increased. Of course, they are also stabilizing. They're moving from the MFI to loan book to the secured loan book. That's why I think the revenue is not much here. I think once they done with the MFI pain stress, I think then they will start growing the loan book onwards. So here they are declared again you can see here last continuous 3 quarters. I think this quarter also probably they can post little bit loss, I think, in the April quarter. So I mean, you should be mentally prepared for that. I think from June onwards, I think, as I said already, they are going to turn profitable, I think. So you can see this company has already got a loan book, I mean, revenue of 3,400 and the market cap is 2,400. I think this is kind of a no-brainer for me. Of course, you should take the opinion of your financial advisor. So another thing, as I said, the amalgamation or reverse merger, there is actually meeting scheduled for this month end. So I think that is also one other drawback or the negative. I think if the 42% holding is been distributed to all the shareholders of the parent company, then they may also start selling. So that is one negative, but I think that is also an opportunity. If you are thinking for a long term, at least 2 to 3 years time, so this can easily, in my opinion, should become 2 times book value. So the current book value is 16 to 32. If you see 32 also, it's a good bet. 2 to 3 years you can double your money. In case if they're growing loan book at 30%, so the book value also increases. So if by any chance if you get a 3 times book value, so it will be 48. 48 means if it is 13 means you can think of it. It's kind of almost like a multi-bagger, so 3 to 4 times you can make the money. But anyway, it is a very, very optimistic way. But you can take your own decision. So conclusion, loan book growth. So ROE and ROC they're going to achieve. ROE by financial 2710 they're going to achieve. I think this is what they can call summary they said, and even they're going to achieve ROE by 15%. And NIM, net interest margin, that is the difference of what they are having as the deposit and the loans what they are giving. So they're going to have at least 8.5%. They're going to have, and 25% medium term. I think this is what I said. Loan book they're going to grow. I think if they're going to grow, I think this is the book value is very less, 18,000. Just to give a comparison, if you see HDFC Bank, SBI and all, they've got 25 lakh crores of book loan book. Similarly, Kotak Mahindra Bank almost like got 5 lakh loan book, 5 lakh crores loan book. IDFC First Bank got some 3 lakh 3 lakh crores loan book. So compared to that, this is nothing. So easily they can grow 25-30%. If they keep growing at 25-30% loan book, I think that's where the magic happens. The profitability will increase, since they are also insuring with the CGFMU for the MFI, so the pain will be less. So I think for me it looks like a very good bet. So the risk is very less as of now. So this is the book value. As I was saying, it is 16.6. If you give 16.6 into 3 as well, so it will be easily like 50 it will come. So into 3 times, if you give 50 rupees will be the price it should come. But of course, there are a lot of dependencies how they execute, whether they will control the GNPA and NPA. So if somebody runs away with the money, there is also a lot of things going on with this IT sector, the AI and other things. A lot of risk is there. But however, in optimistic way, if they are able to grow the loan book 25-30%, and if market gives 3 times book value, so then the price should become 50. The current price is 13. Yeah, it's a good bet in my opinion. And also, losing money here, I don't see that. It's always, you should think about whether I lose money here or not. I think if you think that way, you are not going to lose money. You are definitely going to make money in 2 to 3 years time. So thanks for now. Bye.